Stop giving your money back to the market. Today I'm going to show you a quick little trick to avoid this happening. In today's video, we're going to talk about a very common problem that in fact I still deal with every now and then, and that just has to do with you've made money and then all of a sudden you give back a chunk of it to the market, or worse yet, you give back all of it, or in some cases you give back all of it and then some. So we're going to implement a little quick fix to this. At its core, it's a risk management strategy, but it's something that's very easy to do and anybody can do it. It doesn't take rocket science by any means. So the first part that I want to start off with is just, what's the context, what's going on? So my question is, as traders of stocks, options, bonds, etc., what is our core goal? You may be saying, well, to make money. Yeah, that's true, but at the overall onset of things, and I'll be the first to admit, sure, this is not the most fun thing to talk about, but we want to manage risk. I mean, that's what we're trying to do as traders. We need to be focused on risk management, making sure things don't spin out of control. But if you were thinking, well, our job is to make money, very true. So let's say you have made money. So mission is accomplished from that perspective. But you know what? You want to keep trading. You maybe the days still, there's plenty of time left in the day, or maybe just, hey, there looks to be plenty of other opportunities out there. So you want to keep trading. That's perfectly fine. But point being, you have made the money that you are happy with. So then what happens is, okay, we're going to progress. And then you get to the key point here, where you're thinking about entering another trade, and you have to, okay, well, what sort of position size am I going to use? Now, for example's sake, let's just say you use 500 shares for this, and this is, okay, am I going to use 500 shares again? So you have two things that you can determine right here. You can go smaller, or you can increase it, or keep it the same. It's up to you what you're going to do at this point. Now, I'm going to say the quick trick comes right here. You make it smaller. So instead of using 500 shares like you did back here, why not, for this one, I'm just going to use 300 shares. So let's just carry this through the rest of the progress here. And there's going to be two outcomes, right? You're going to either have a losing trade, or you're going to have a winner. Pretty straightforward there. So we don't know which it's going to be, but before you can get to losing or winner, you have to put on the trade. And part of putting on the trade is your planning, and part of the planning is your position size. So let's just go through here, and we'll start off with, let's just say that you keep it the same. Well, if you keep it the same, you're going to end up with a pretty big dent, right? You're using 500 shares, you took a loss. Okay, well, that just took out, that dented into that pretty darn good. Now, on the winning side, hey, you know what? You won, so it's going to just keep on increasing that much faster. So it's going to keep on going up at the rate that you were already getting. So it's going up nice and fast. What about the other side of the coin? What happens if it's smaller? Losing trade, we'll call this actually a drop in the bucket. Meaning, yeah, you took a loss, but you're only using 300 shares. Maybe you're only using 200 shares. Over the long term, it's going to be very, very difficult to give back these gains. Again, assuming that you're still focused on managing risk. So you have stop losses in place. You're doing all that sort of things. But if you're being risk conscious as you trade, it'll be very, very hard to give back your gains that you've already made if you cut down your share size. If you go smaller in your position size, it'll be very difficult. You will actually have to try. You'll have to make an effort to give back the gains when you make that smaller. That may sound goofy, but that's how the math works, is you will have to make an effort. You will have to try to go on a losing streak, just bad trade after bad trade after bad trade, because it's just much more difficult because you're no longer using the same amount of shares that you were using when you made this amount of money. So losing is literally just a drop in the bucket, oh well. Winning, well, I'm calling this a cherry on top. Why is that a cherry on top? Well, remember, and this is the key thing here. Let me grab another color. What was the premise here? The premise here was that we already made the money that we were happy with. So to me, from a risk management, money management perspective, why keep your risk the exact same? I mean, increasing it is just silly. That's how people, give back their gains is I'm on a win streak, I'm doing really well, I'm going to increase my share size. And then they get a losing, and sometimes not only is it a dent, it's something much bigger. But if you've made the money you want, why don't you just cut down your share size? And if you lose, hey, no problem. And if you win, sure, it's not going to go up as fast. That's just risk versus reward. But hey, a couple sprinkles on top, a cherry on top, whatever you like, maybe some extra pepperonis on your pizza. I don't know how you want to look at that, but it's just some additional funds that are coming in. So you're risking very little compared to what you've made. And if you win, hey, you're still just putting some additional profits in your pocket. Now, I'm not saying one is better than the other. I'm just saying that, to alleviate the problem and make it much more difficult to give back your gains, when you get to the position size of your trade plan, just make it smaller, cut it in half, whatever you feel comfortable with. And like I said, you're literally going to have to try hard to give back those gains because you're using smaller share size. So keep that in mind. And, if you think that is worth trying, give it a try. I mean, worst case that happens is you have a loser. Well, hey, good. At least it's a drop in the bucket. Or you have a big winner. Well, it's not quite big, but hey, it's at least you're still making some profit on it. So keep that in mind as you go forward, and don't get carried away. This I would say is probably the evil one right here that causes many people problems. They're making money, or they've already made money. Hey, you know what? I'm going to increase share size, and then all of a sudden they get a losing one, and that puts a big dent into things. Then they go into revenge trading, and it just spins out of control from there. So keeping it the same, I'm not going to say that's terrible. But making it smaller is going to be a very simplistic risk management system that you can put into place to make your life easier in regards to not giving back the gains. So hopefully this helps. Get out there and trade without emotion.